Been involved in credit markets for 30 years now, and the vast majority of that time was spent in multi-strategy, long-short hedge fund environment, and primarily looking at global high yield. Global high yield, they're just words, but it's probably worth giving you an idea of the types of situations, the types of names that we're looking at. I mean, we were looking at Argentinian gaming companies which operated from riverboats in Buenos Aires. We were involved in UK and European poultry farms when the bird flu first hit. We actually had an interesting situation with a Italian dairy company, very large dairy company, which had a capital structure which just never made sense. I mean, they had close to 4 billion euros sitting in an account in Latin America, but they were funding high yield bonds in Europe. It just didn't make sense. It wasn't until 2003 that we realised that that cash never existed, despite the fact they'd provided fraudulent bank statements to prove that it had. But from looking at Balkan retailers, Greek telecoms to Bulgarian steel plants, the point is that when you're trying to generate credit alpha from risky credits and illiquid credits, life is never boring. We actually had a situation where there was a CFO who was apprehended at an airport with over 500 grand in cash in his luggage. So on returning from London to Australia, which is primarily an investment grade bond market, I wasn't expecting to be blown away by the intensity of due diligence processes here. And the reason is because when you're involved in global high yield, due diligence is the foundation. I mean, you hope to understand the company and the cash flows better than your competitors. But quite frankly, on returning to Australia with Coolabah Capital, I've been blown away. Yeah, it's interesting. We're a team of 26 execs. We have 13 analysts, 4 PhDs, 2 university medalists, and we have offices. There's 2 offices in Sydney, ourselves here in Melbourne. The credit research team works from 80 Collins Street, and we have an office in London. We have a style which is very active. We've traded 33.5 billion worth of credit in the year to date, and we're not actually searching for yield. We're searching for mispricings, and we have about 30 or 40 quant models which determine those mispricings, and that's how we generate our capital returns. And when we trade, we're winning 98% of the time. The major focus at Coolabah is to minimise risk. I mean, we're absolutely obsessed with minimising risk. The type of firms we invest in, those firms who have government guarantees, implicit government guarantees, governments themselves. And thereafter, we're looking for firms which are the dominant market players, the too big to fail names. One thing that we carry through the whole firm, not just in the credit research team, is we never forget the definition of credit quality, which is the ability of an entity to withstand both internal and external shocks. And we avoid those companies who do not have the ability to withstand those external shocks. An example of that is with Virgin, the Virgin bond, which was issued in 2019. I mean, despite an 8% coupon, that company was not yet profitable, it was very leveraged, and we believed it did not have the ability to withstand an external shock like a recession, which it didn't. In terms of our current portfolio, our largest position at the moment is actually government bonds, followed by those dominant market position firms, those too big to fail, such as CBA and NAB. The portfolio also tends to rate very highly on an ESG basis. The average bonds are rated AA, which is close to the highest rating. And we actually released an academic paper in 2019, which looked at the fact that firms which had a better credit quality tend to rate higher on an ESG basis than those who had higher credit risks. And on the other hand, those firms with lower credit quality, such as airports, airlines, resource companies and transport companies, tended to struggle on an ESG basis. But the thing which influenced me most positively when returning from London was with respect to due diligence. And due diligence it's honestly, it's a wrong word. It provides a foundation, but it's more activism. And when I talk about activism, I mean actually educating companies, regulators, even governments about appropriate courses of action, actually driving the agenda and influencing outcomes, not just individual company outcomes, but for industry themes as a whole. This is a major focus at Coolabah, and we've been told by many of our investors that we're the most activist investor that they've ever seen.